Hello everyone. So this is part 3 of May-June 2023 paper 1 variant 2. Question number 22 is saying that a trader pays her insurance premium on 1st January each year for the following 12 months. She made the following payments for insurance. She made two payments. One she made on 1st January 2022. The second she made on 1st January 2023. How much did the trader include for insurance in her income statement for the year ended 31st March 2023? So if you have to see that for the year ended 31st March 2023 means that if the year is ending on 31st March 2023, it is basically starting on 1st April 2022. So for 2022, so basically April, May, June, July, August, September, October, November, December, 9 months of 2022 is basically included in this, and 3 months of 2023 is basically included in this. So if you do 1680 basically divided by 12, so you'll get a monthly, you will get basically a monthly charge for 2022. So here that'll be 140. 1680 divided by 12, and then if you multiply this by 9, so 9 months of 2022 are falling in your year, so that should total to 1260, and 3 months of 2023 is falling in this year. So basically 1920 divided by 12 gives you basically 160, and then when you multiply 160 by 3 you get 480. So now 480 plus 1260 will be the amount that should be included in the income statement for the year ended. Basically the charge that should be charged against the profits in the income statement should be 480 plus 1260, and which gives me a total of 1740. So 1260 plus 480 is 1740. Okay, question number 23. Which item is added to the profit for the year in the partnership appropriation account? If you remember the format of the partnership appropriation account, this should not be a problem. This is a direct answer B. When you start profit for the year, then you add interest on drawings, and then you subtract interest on capital, subtract partner's salary, and then you divide the profit share. So interest on drawings is basically added to the partnership, the profit for the year in the partnership appropriation account. Okay. Question number 24 here is saying Abby and Ernie are in partnership. Ernie is entitled to an annual partnership salary of 3,000 and the share of residual profits. Basically they share residual profits and losses equally. The profit for the year ended 31st August 2022 was 12,600. Then they are saying on 1st September 2021 the partners' current account balances were as follows. Abby's current account balance was 2500 credit, Ernie's current account balance was 1400 debit. Then they're saying what was the credit balance on Ernie's current account on 1st September 2022. So basically they want you to make the current account, so you can simply make the current account balance brought down here 1400. Then they are saying Ernie is given a salary of 3,000, so you record that on the credit side, and the profits and losses are basically shared equally. So if 12,000, if you divide it by 2, if you divide so basically this profit for the year was 12,600, of which salary was basically subtracted first. So if you subtract salary from this, that is 3,000, you will be left with a 9,600 profit, which is divided equally. So 4,800 for Abby, 4,800 for Ernie. So that means Ernie is entitled to a profit share of 4,800. So 1,400 is on the debit side, and then obviously you'll get a carried down over here because credit side is heavier. So 7,800 is on the credit side, 1,400 is on the debit side, so you get 6,400 as your balance carried down, and this totals to 7,800 on both sides. So this balance carried down will become your balance brought down. You'll get 6,400 as your current account balance on 1st September 2022. Okay, what is meant by the term equity? The term equity is basically the total funds provided by the shareholders. So Equity in case of limited companies is what the shareholders are investing. So ordinary share capital can come here, preference share capital can come here. So equity is basically raised from shareholders, whatever funds you're raising from shareholders. The rest of the options are obviously incorrect. Then they are saying, question number 26 here is saying that during the financial year, AB Limited paid debenture interest of 1400 relating to that financial year. At the end of the year, debenture interest of 700 was accrued. How was the debenture interest shown in the financial statements for the year? So accrued is always added. So if there is an expense that is owing, accrued is the other name for owing. If you've incurred a greater expense but you have paid less, let's say because you've paid 1400 but you have incurred 2100, because that is why 700 is accrued. So your 2100 should go to the income statement, and in the statement of financial position, in the statement of changes in equity, there's not going to be any entry for accrued. Accrued will go to the statement of financial position as an owing expense. Basically, owing expense is your current liability, but in the statement of changes in equity, it will not come. So B should be your answer. Then question number 27 is saying which items are included in the income and expenditure account prepared for a sports club. So then they are saying, okay, income and expenditure account is just like the income statement. So revenue, expenditures and revenue receipts will be recorded in the income and expenditure account, and something that is not recorded in the income statement will not be recorded in the income and expenditure account. So cost of new furniture purchased during the year for clubhouse will not be included in the income and expenditure account. Depreciation, yes, depreciation on furniture and sports equipment will be included in the income and expenditure account. Rates for the clubhouse paid in advance for the next financial year, paid in advance is always subtracted, so it's not included in the income and expenditure account. Subscriptions that remain unpaid by club members at the end of the financial year, owing is always added, whether it's an income or an expense. So subscription is an income, and it's when it's owing, that means you need to add it to the subscriptions that you have received during the year in your bank. So basically 2 and 4 should be your answer. So answer is C. Okay, question number 28 is saying Melody is a music club. The club holds a music concert every year. Prizes are awarded to the musicians selected by a judge. Then they are saying the club provided the following information related to the latest music concert. So basically they've done a concert of which they have raised some revenue and they have spent some money to arrange the concert. So they are saying what was the profit from the concert. So sale of concert tickets is basically revenue. So what you're generating out of, so that's going to be your something that is a positive, because that's going to increase your profit. Purchases of concert prices is basically an expense, so you need to subtract that. Sale of concert programs is again going to be your it's going to be a positive. And then the payment of fee to the concert judge is going to be a negative again, because it's like an expense that you've undertaken to hold the concert. So your answer should be 1500 minus 450 plus basically plus 150 minus 250 is going to give you, the answer should be A. So 1500 minus 450 is 1050 plus 150 is again 1050 plus 150 is going to be so 1500 minus 450 is going to be 1050 plus 150 is going to be 1200 minus 250 is going to be 950. So 950 is your answer, that is answer is A. Then in question number 29 is saying a business provided the following information. What was the cost of raw materials consumed? So cost of raw materials consumed or cost of raw materials used is one and the same thing. Opening inventory of raw material is 50,000 plus you add the purchases of raw materials, so 50,000 plus purchases of raw materials, that is 80,000, plus carriage on raw materials, that is 2,000, is going to total to 132,000 minus the closing inventory of raw materials, that is 60,000, is going to give you 72,000 as your cost of raw material consumed. Okay, question number 30 is saying Ashwin started a business as a taxi driver on 1st January 2022. His taxi cost 5,000 and he paid 100 into the business bank account. So that means he's basically going to basically capital at start is going to be 1500 or 5100 because 5,000 plus 100. Then he's saying that he did not keep for any accounting records, so that means it's an incomplete record questions. Then the incomplete records question, basically on 31st December 2022 he had 1750 in his business bank account, so that is an asset. Then he's saying his taxi valued at 4,000, so that is again the value of your asset, so you add it. He owed 50 to the garage for repairs, that is an owing expense, you need to subtract that, that's a liability. During the year he took goods, took 1600 out of the business bank account as drawings, so that is drawings. So assets minus liabilities here is going to be 1750 plus 4000 minus 50 is going to be 5700. Okay, 5100 is the capital at start. So basically the formula here should be capital at start, add profit for the year. So basically they want you to calculate profit for the year. So capital at start is here 5100. Your profit for the year is X, you don't know that. So this is like a capital section of the statement of financial position. Minus 1600 is your drawings, is equal to capital at end. If you solve for the value of X here and X becomes the subject of the formula in this case, so your answer should be B, 2200 should be your profit. Basically X will come out to be 2200. Okay, question number 31 here is saying a trader did not keep a full set of accounts. So again, incomplete records question. He provided the following information for the year. Then they are saying opening trade receivables, they've given you opening trade payables, they've given you closing trade payables, they've given you payments to credit suppliers, and then they have given you cash discount receipts. So in this case, when you have opening trade payables, you have closing trade payables, you have payment to credit suppliers, you have discount received. In this case, always use a purchase ledger control account to basically calculate the purchases here. What you'll do is, okay, opening trade payables, because trade payables is a liability, you record that on the credit side. Your closing trade payables, obviously if the brought down is on the credit side, the carried down should be on the debit side. You write here 9800. And purchases you don't know, so purchases basically comes here. Basically credit purchases comes here. Payments to credit suppliers will come here, 35,000. Discount received will again come here, 3,000. So basically this is on the rule that whatever increases your trade payables, you record that on the credit side. Whatever decreases your trade payables, you record that on the debit side. So if you total the debit side minus the credit side, what you'll get here is, so your answer should come out to be D, 42,800. So 35,000 plus 3,000 plus 9,800 minus 5,000 should be 42,800. So that is basically you have actually used a purchase ledger control account to calculate the total purchases in this case. Okay, question number 32 here is saying T Limited provided the following information. They are saying what was T Limited's return on capital employed. So it's very simple, you need to apply the formula of return on capital employed. So if you know the formula of return on capital employed, you need net profit before interest in your numerator, and you need to have equity and non-current liabilities in your denominator. So equity here is 192,000, non-current liabilities is 20,000. So 29,200 divided by 192,000 plus 20,000 should basically give you 212,000. When you multiply it by 100, you get a 13.77%. This is basically direct application of the formula of ROCE, that is return on capital employed. If you know the formula, you'll be able to do it. Okay, question number 33 is saying Sabello's liquid asset test ratio was higher on 1st January 2022 than it was on 31st December 2022. So 1st January is start of the year, 31st December 2022 is end of the year. What could have caused this? So when asset test ratio is basically current assets minus inventory divided by current liabilities. So if your asset test ratio is higher in the beginning, it's lower in the ending, so it's either like inventory is not going to affect this ratio because inventory you're already subtracting. So if you you just need to cancel out inventory, the option for inventory, then they are saying this ratio is basically going down, right? So this ratio can go down by either, you know, if your current assets are going down or if your current liabilities are increasing, then this ratio will go down. So if your current assets are going down, that is trade receivables have decreased over time, that is why your ratio has decreased. In the other two cases, the bank overdraft decrease and the other payables decrease should basically increase the ratio rather than decreasing it. Okay, question number 34 is saying the following ratios relate to the business of Eva and Max. An accounting student made the following statements: Eva can meet her liabilities, current liabilities from her current assets more easily than Max, which is not true because Eva's current ratio is lower than Max's current ratio, so this is a wrong statement. Eva can meet her current liabilities from her liquid assets more easily than Max. This is true because Eva's liquid asset test ratio is better than that of Max's liquid asset test ratio. So yes, this is correct. Max has insufficient current assets to meet his current liabilities. No, that is false because Max has 2.4 current assets to meet his $1 of current liabilities, so that's a wrong statement. Then they are saying Max has sufficient liquid assets to meet his current liabilities. That is true because liquid assets is 1:1 here, 1.0:1, which means 1:1. So Max has $1 of liquid assets to meet his current liabilities, so this is true. So answer should be D, 2 and 4. Okay, last question here is a cafe owner made no entry in her accounts for increased competition when another cafe opened nearby. So increased competition, you cannot journalize it, you cannot have a journal entry for it, you cannot have a monetary value to increased competition in accounting. So in accounting you can only record those things which have a monetary value. If something does not have a monetary value, you're not supposed to record that in the accounting record. So basically the principle that is being applied here is money measurement. So that's it for this paper. I'm hoping this will help you guys for your exam, inshallah. So that's about it. Thank you so much for watching.